Our columnist wrote earlier, this is a bailout that nationalises losses and privatises gains. Weren't banking rules meant to stop this?
I totally disagree with that statement. It's not a bailout, and everything was done by the rules, and it's a national liquidation of two banks declared failing or likely to fail by the ECB.
Would you not say, though, that those who claim that this unwind, we'll call it, undermines confidence in the banking union project?
I don't think so. As I said, we negotiated the rules with the European institutions, the SSM, the SRB, DG Competition. DG Competition has stated yesterday that state aid is totally legal in this case, so there is no disruption of the rules whatsoever.
OK, it's legal, but a week or two ago, Spain's Popular went down a different route. It was wound down without state aid. How are these two Italian lenders different from Banco Popular?
Well, I think that the difference is between Banco Popular, not Banco Popular and the Veneto banks, but between Santander and the Italian bank that decided to come in and acquire the good assets of the banks subject to liquidation, but with the clause that the capital ratio of Intesa Sanpaolo, the acquiring bank, would be kept unchanged by the operation. So while on the other hand, Banco Santander had to raise as much as 7 billion euros to raise capital to leave the ratios unchanged.
So you don't accept the accusation that some have levelled today that this unwind, whatever you want to call it, leads to a non-level playing field in Europe? Absolutely
not. This is capital neutral, so the position of the Banca Intesa has not changed from that point of view. And as I said, given the fact that this is a liquidation according to some specific rules, it was deemed to be totally legal from the point of view of state aid rules. So this is not exactly because it's not changing the playing field that we had that assessment by DG Competition.
Finance Minister, regardless of what you say, there are concerns in Germany. Might this hinder further Eurozone integration, as some have suggested today?
I totally disagree with that statement as well. We have strengthened the euro integration and we have strengthened the banking union, and we are working to make it even stronger.
Can you talk to me about the cost? I mean, you know, it's near 20 billion euros. That could ultimately be the cost. What would it have cost you to have done the same a year ago?
It's not 20 billion euro. The outflow of money from state budget is going to be around 5 billion, and then there is a guarantee set which is up to 17 billion, and those initial 5 billions are most likely to be recovered by the states over due time. So
okay,
this
so
is not about...
okay, so you're committing 17 billion, as we know. Yeah, but what would it have cost you a year ago?
We are not committing. We are... A year ago, it was a totally different world with different situations, and a year ago there was a solution, a private sector solution, Atlante, which didn't go through. So it's not that because we are now in that this changes the picture. And as I said, we're not committing that. There is a guarantee up to 17 billion, so this is a totally different story.
OK, so 5 billion you're hoping is going to be recovered, at least in part. That's what Prime Minister Gentiloni said today. How confident are you about recovering that 5 billion euros?
We are quite confident for two reasons. First of all, because the amount of assets which are in the bad bank, which is now being managed by the state, is larger than the amount to be recovered, number one. Number two, we are confident that this, exactly because of the operations that was concluded today, the mood in the market will improve, as it is quite clearly happening today, and this will strengthen the value of NPLs to be recovered. So we are quite confident this will be the case.
What happens if you don't recover it?
Well, if we don't recover it, we have already set aside in the budget, in the December arrangements, money to deal with capital strengthening in critical banks. So this is not putting an additional burden on state finance.
Finance Minister, can you tell me about this plan and how it affects the government's ability to intervene in Monte Paschi?
The Monte Paschi story is totally independent, and it's a different machine. As you are perfectly aware, in the case of Monte Paschi, we are pursuing precautionary recapitalization itself fully under European rules, and the case is different because Monte Paschi is a perfectly viable bank, which was not the case of the two Venetian banks, as the statement by ECB clearly mentioned. So it's a totally different world.
So taxpayers, will they be on the hook or not?
As I said, the amount of public resources set aside for this kind of operation was already discounted in December. So this is not additional state money to be levied on taxpayers. Taxpayers are not affected.
So can you tell us what progress you're making on Paschi right now?
Monte Paschi is about to complete the operations that will, according to state aid rules and European institutions, be required to ensure long-term viability of Monte Paschi. And once that's settled and the deal has been struck with the European institutions, the state will officially enter with capital, and so we will begin the phase in which, for a given amount of time, which I hope will be as short as possible, Monte Paschi will have enough capital to be finally on a very sound long-term viability. And so when that is achieved, the state will simply get out of Monte Paschi, and Monte Paschi will go on the market to raise capital.
Do you envisage, Finance Minister, any other lenders needing state aid? Is that it now?
We don't expect other lenders needing state aid. And we are only considering, of course, as I said, cases in which this would be, in theory, and let me underline that, in theory, with new cases. But we don't expect new cases to come up.
Is Carige, in theory, one of those lenders you're referring to there or not?
To my knowledge, Carige has been requested a number of adjustments by the European institutions, and they're complying with those requests. So this is good news.
And does this, Finance Minister, the question that everyone wants answers with, roughly 300 billion euros of NPLs, does this put to bed concerns about non-performing loans in Italy?
Well, this certainly is a turning point towards a positive outcome of the progressive elimination of NPLs, which is already underway. As you know very well, NPLs have started increasing and are beginning to decline already by a few months. And this is done through market operations. And of course, you are familiar with cases in which significant amounts of NPLs were discharged. Think of UniCredit Bank, which was able to raise 13 billion capital on a totally market-based operation. Other banks are getting rid of NPLs also thanks to instruments introduced by the government, like a guarantee mechanism, which we call GACS, or because we have accelerated procedures to get rid of NPLs in a debtor-creditor relationship. So things are moving. Perhaps they could move faster, but they're moving in the right direction.
Finance Minister, if I can finish with a non-Italian bank question. You'll be aware today that UK Prime Minister Theresa May outlined her citizen rights plans. Her initial plans were met with a lukewarm response from the EU. She said today that nationals living here will enjoy the same entitlements in their daily lives, EU nationals, as British people after Brexit. I don't know whether you've had an opportunity to listen to Prime Minister May today or had a chance to read what she said earlier in the House of Commons. Do you have any response?
Well, I don't have a specific response to those specific statements. I hope we can make progress in agreeing on a new regime which satisfies both sides, the UK and the European Union. But I don't see it as easy as sometimes is depicted.